All right. You guys should all be able to hear me now. Hey, YouTube, Twitch, good to see y'all. Phil, Taz, great to see you. Thanks, Lorna. Appreciate it. So let's talk about the market today. As we normally do in these sessions, we will, of course, go over SPX. We'll talk about how the Fed typically acts today. We'll see if it stays within that normal course of what we can anticipate on a Fed day. And then, of course, from there, if you have any questions around strategies, option strategies, around trades, around indicators, symbols, anything like that at all, I am more than happy to answer your questions around the market to the best of my ability. And if I think there's a better place to go and gather that information, like it's on futures or something, I will certainly point you in the right direction. So let's get started. Over here with the SPX, from an intraday perspective, this thing just keeps running to the upside. We did have a bullish divergent bar. I believe that was valid into the close yesterday on the hourly chart. I know I've talked about this in the free room before. We've certainly talked about it over in the small account mentorship. But sometimes when you get a valid divergent bar, especially when it's one that's in line with the trend like this bullish divergent bar was, there's usually a good probability it will follow through the next day if it doesn't follow through the day of. And so you can see we had this bullish divergent bar here right off support. Did have a little bit of exhaustion to be mindful of, but the compound breakout tool was still bullish. The trend, of course, is still bullish. Bollinger Bands are pointing up. So if you took an overnight bullish trade, depending on what your strikes and your strategy were, should have allowed for a nice profit this morning because you got the follow through on the higher high. And we are attempting to work our way up into 4,400. Maybe we'll tag that prior to the announcement. But there are a few characteristics about today that are a bit more common for how Fed days could typically go. It may not work this way right today. Doesn't always happen 100% of the time. But more often than not, this is how the Fed day goes. And certainly, hopefully this gets bigger. There we go. So this is a screenshot of what happened on the last Fed event. And hey, Daniel, good to see you. This is what you can usually anticipate of a characteristic for a Fed day throughout the market, which is usually we get into some sort of choppy range that's identified pretty early in the market. Oftentimes it happens before Europe's close, before the lunch hour, certainly, and then we chop going into the 1 o'clock news. So you can see last time we had that consolidated range. We had the top and bottom end. You can see that the market just kind of hung out in that range. The Bollinger Bands turned flat. Momentum got a reset back down towards the zero line. So all of these, certainly the compound breakout tool, at least for a few bars on the hourly chart, got that consolidated signal. So all of that is kind of commonplace for what we see prior to the Fed announcement itself. Then once the announcement happens, you oftentimes get volatility in both directions. When that first bit of news is released at 1 o'clock Central, on whether or not we're getting a rate hike, a rate cut, a rate pause, which the pause is what's basically priced in at this point. And you'll get those algos to start to go, right? And they kind of shake people out of the market. So you can see where that volatility happened right around 1. And then at 1:30, when Powell jumps on the mic, or whoever technically is head of the Fed at the time, whenever they jump on and start speaking, and more importantly, answering questions, then you get that second spike of volatility. And usually that volatility starts to lean towards a trend move, right? Because the algos, the big boys, the hedge funds will start looking for those key words on what they think the Fed could start to do for the next time. For example, on this last Fed announcement, the one where this picture was taken, they talked about that they were likely going to lean away from doing any more hikes, right? So that's usually a positive. But the downside and what had been priced into the Fed futures prior to the announcement was some sort of rate cut, right? Either late in the fall, going into winter. Fed futures had started to price in the possibility of a rate cut. And part of that was due to what happened with Silicon Valley Bank, right? And those smaller regional banks getting hit. So that's where that thought process started to pop up from. And when Powell jumped on and he started talking, he basically said, "No, guys, we're not talking about rate cuts. Maybe a pause, but we're not even really considering rate cuts at this point." And so what happened? Well, the market reacted negatively that day to the news, right? That's not what it really wants to hear. The market likes hearing about rate cuts because, that means free money. That means things are usually bullish. And so we got a bit of this pullback that occurred down into the close. And that's what usually happens after he starts talking is you get that trend move lower. And so that's kind of what I'm looking for today. The question, of course, is will we actually get that follow through? Currently, SPX seems to be on a bullish run this morning, right? We haven't really quite identified that choppy range that we normally see. We opened a little bit lower compared to yesterday, but immediately started to bounce off. Basically, we opened at hourly, that held, we started to bounce higher. And now we're just trending to the upside. I was on the mic a little bit earlier with Joe. Hey, 007, good to see you. Hope you're doing well. I was on the mic a little bit earlier with Joe actually, and I was telling him I was looking for a pullback in NDX. And when I jumped off, I mentioned in the small account mentorship, I'm ideally looking for a pullback, back down into the hourly support, back down into this range, maybe test 14,900, which was kind of a price resistance level yesterday. See if we can go back down, test it as a price support now because we're trading above it. And if that held, if the hourly 10 period simple held as support, then look for a re-entry to play for a bounce back to the upside. And arguably, as soon as I jumped off the mic, I went to go deal with the kids for a second. We did get a pullback into the 10-minute support, and then it immediately bounced. So for anyone watching this who maybe took that quick scalp on the 50-point move higher, really we got up to like a 70-point move higher. Well done, because it worked out quite nicely. But it wasn't as strong of a pullback as I was ideally looking for to jump in for an intraday style trade. And certainly trading at these levels near the highs when we're not near support, right? I either need at least another pullback like this to consider an entry or wait for that bigger pullback on the hourly chart, ideally to where we can maybe start to identify that choppy range if that's what's going to be in play for today, and look at that as the buying opportunity for an intraday move. One thing to be mindful of, though, on Fed days like this is premiums are usually a bit more spiked, specifically on the indexes, but it can also happen across the board on individual symbols too. On the option side of things, those premiums are spiked. And the reason why is due to the uncertainty, right, around that announcement. Even though it is basically priced in at this point, they are going to pause today, that they're not going to do any more rate hikes, certainly not going to do any rate cuts, right? All of that is kind of priced into what the market's anticipating. There's still, of course, that possibility that that's not going to happen, right? Maybe they do decide to do one more rate hike, which I could certainly see causes the market to get maybe a stronger pullback. Or maybe they come on and Pal starts talking and he's like, yeah, actually, you know what? I know I said last time we weren't even considering cuts, but now we might look at some cuts, right? And that in turn might cause the market to bounce higher. And so it's due to that uncertainty of what could happen, usually around the press conference itself, that causes those premiums to be a bit more spiked. And then what happens is once the news is first released at one with the algos getting that move in either direction, then some of the premium starts to disappear. And if you're fast enough and you choose like the right strikes and stuff, sometimes you can make some good money just off those algos trying to shake other traders, usually the retail side, out of things, right? Sometimes you can get a quick win, profit recycle something quickly. But otherwise, you need to be very careful about jumping into a trade really prior to the announcement and then trying to hold through it longer term. Because if you're on the opposite side of things, let's say, the market does end up selling off of the news like it did last time, and you're looking for things to go bullish, then that premium, especially if you're in something like an out of the money call, it's going to disappear. And it disappears quickly, especially if you're on same day expiration. So be mindful. It's almost like an earnings announcement, right? Usually on a symbol going into the earnings announcement, the premiums kind of stay buffed up. You don't see that theta decay working in the normal fashion it usually does. And then once the announcement occurs on earnings, that's when theta basically sets into the options. Anything that's out of the money, the premium gets taken out, right? And then it starts going in whatever move it's looking for after the news event. And the same thing happens on Fed days, specifically Fed days like today, where Powell is going to talk, not the minutes, right? The minutes are a little bit different, but on days where they're actually holding a press conference and answering questions, these are the days that can usually get that little bit more of spike of volatility into the close from an intraday perspective. And in turn, what causes those premiums to stay just a little bit more jacked up and higher in regards of capital risk. So be mindful of that from the risk standpoint, certainly. And AM, absolutely, we can take a look at NVDA. I'd be happy to pull that up. There are a lot of things that feel like they're a little bit extended, right? Certainly from an individual point of view. But I will say on the daily chart, the issue I've had with this beautiful run to the upside really is I would ideally like some sort of pullback to then jump in and play it higher. And we're not getting that from a daily chart, right? This keeps stair stepping up along the upper Bollinger Bands. But the issue is there's nothing telling us yet that we could potentially get that pullback. Bollinger Bands are still flaring open. The overall trend is still bullish. The compound breakout tool, which started printing back here, if you jumped into a long call here, right? That's been a solid move to the upside. You have momentum building higher, but momentum's the issue. Momentum on the daily chart is nowhere near exhaustion levels. If it wants to go up and test the top of the axis, which isn't uncommon, it has a lot of room still to keep going. It looks like, just eyeballing it, it's a little bit above halfway there, right? Which means that we may not get the pullback we're looking for, especially if the Fed does something that the market really wants to hear. It could be that we just keep there stepping to the upside. Now, eventually, we do usually get some sort of consolidation or we get a pullback into support, which is what I'd like to see. But that may not occur if the strength really continues until we actually get to daily exhaustion levels. So just something to be aware of. Lynn also mentions ORCL had a pullback, recovering today and path trying to break out 1830 level. And I'm watching. Okay, let's add those to the list. We can take a look at both of those, certainly. Let's go ahead and get started there. And then RP saying, hi, Allison. Seems the awesome oscillator is similar to the squeeze histogram. Can you explain what you're looking at between the two? That is, how do you use them together? Thank you. Yeah, and it is very similar. You are correct. So the reason why I still keep the awesome oscillator up, because both of these track momentum, right? The bars on the squeeze pro or whatever squeeze you're using, and the awesome oscillator, they both end up tracking momentum, but they are slightly different in how they track things. And because of that slight difference, I still keep up the awesome oscillator. And a part of that is because I'm a creature of habit, right? The awesome oscillator is one of the very first indicators I've ever had on my charts. It was the awesome oscillator, the second deviation Bollinger Band, and the 10 and 30 simple moving averages. Those were the very first indicators that I ever started to use on my charts when I first started to learn how to trade. And so because of that, I've, over the many years that I've been trading now, it's been a while now. I've come to know the little nuances within the awesome oscillator. So for example, let me see if I can find a good example here on the S&P. I might not. It might be better on an individual symbol. But sometimes, for example, it will look like we're at exhaustion on the awesome oscillator and we're not on the histogram, or vice versa. The histogram might look like it's at exhaustion and we're not quite there yet on the awesome oscillator. So sometimes that will keep me in a trade a bit more. They don't quite move exactly the same way, or sometimes I'll get an early crossover on the awesome oscillator versus the histogram, which tells me, okay, trend is changing direction. Let's jump in, to the bull side or the bear side. Sometimes, we'll be flat when we're not as flat on the histogram, and that's a sign of consolidation. So it's just those little nuances, how they're slightly different, that still keeps me using the awesome oscillator. But technically speaking, if you find that the histogram works for you here, by all means, you don't have to use the awesome oscillator, right? They do stay in line for the most part. It's just, like I said, I'm a creature of habit, so that's part of the reason why I have still stuck with the awesome oscillator to this day. But if you're able to use the histogram and you don't need as many indicators on your charts, please don't feel the need to. So I hope that helps you out. The squeeze I mainly use for the actual dots itself. That's what I usually look at. I don't look at the momentum side of that as much as just, do I have a squeeze printing? I do. Okay, that means I can anticipate a greater than anticipated move. And then I look at my other indicators to see if I think that move's going to be to the upside or to the downside, and then let it go for firing. Yeah, of course, RP. And I do have a video out there on the Simpler Trading website. I know I've posted this in here before, but for anyone who's new, certainly take a look at this Google Doc. I'll copy the link address here. But in this Google Doc, there are a lot of educational videos that not only I did, but other simpler traders here did, around a lot of different education. And one of the videos that I did, which I'm in that first column, is the awesome oscillator. And so I dive into that in a lot more detail. So certainly check that out, and it will go into a lot more depth. I did, I think, like a 30-minute session on it, on how I use that, why I like it, and the little nuances around it. So feel free. So over here to MVDA. I mean, this is just, it's been on a beast mode this year, going to the upside. Earnings had a beautiful gap to the upside. We started to get up towards 400. 400 started to act as a price level. We did actually reach exhaustion levels from a daily perspective at that range. So it made sense for it to either consolidate or pull back. In this case, it consolidated. That consolidation allowed momentum to pull back from the top of the axis and reset. But what's interesting is today we're actually starting to get a green bar. Now, this could just be a one-off green bar, kind of like what we've seen sometimes on pullbacks and it keeps going, or vice versa, a random red bar when things move higher, right? It could be just a one-off bar. But sometimes, and this is more common on the indexes, but it can also happen on individual symbols like MBDA, especially when they're on a really good run like this. Sometimes you don't get the full pullback to the zero line, right? Sometimes it will pull back just slightly and then build back up in green momentum bars and basically retest the top of the axis. And what that allows for the underlying price in the trend move is it basically means that I took a slight breather and now I can keep going in the bullish trend. And that could be what's actually setting up here. There's a room now to play back to the upside to the top of the axis. Our pullback signal on the compound breakout tool has started to cancel out. It's not giving us the strong bullish signal I'd like to see, but the fact that it's canceled out of the pullback signal means it's not anticipating any more of that bearish turn down, at least at this point. Bollinger Bands are still flaring open. So they're definitely still anticipating a move higher, and they're trying to make room for it to keep going. And then, of course, we're still very much in a bullish trend. Let's take a look at the weekly. Sometimes when we get to high levels like this, when we've seen strong moves, I look at weekly exhaustion and see where that's at. And that can kind of be a better clue on, okay, how much more does this have to run? Or is this like the last sprint to the finish line, if you will, before it finally decides, okay, I need a break. So we'll wait to see if that can load up. Let me move back over NDX there. Actually, okay, there we go. So here's the issue currently with NDX on the weekly chart. So we're technically at the top of the axis, right? Normally, you would say, okay, top of the axis, exhaustion. If I am in something on the call side, I need to start taking profits. I need to protect capital because this thing could really could fall back down, and I don't want to end up losing the profits and the gains that I see. The situation, though, here for NVDA on the weekly chart is actually a little different. Notice that prior to this recent run up, this actually back here used to be the top of the axis. So let's zoom in some so you guys can get a better idea of this. So back here, back on this high that we had in 2021 before last year with the downturn, this was the top of the axis, right? That was where exhaustion hit. You can even see it here. We got the red bars, you got the pullback in the price. And so all of that makes sense. And on the recent run up, we hit basically towards that level, and you did get a couple of days of a red bar, right? So it was trying to show that that could be exhaustion again. But then what happened is NVDA, mainly off this earnings announcement, said, nope, I'm going to keep going, right? It came out with that news around the chips and AI, and AI is the big new thing that all that it makes the market want to go higher. It's what everyone's talking about on the tech side. And so, of course, that really shot the price up. You had this huge green bar that gap to the upside off of earnings towards 400. And so what happens is this top of the axis, because of how much strength was behind that move, it starts to adjust higher. Now, this isn't as common as it is with like a new symbol, right? When something has first come out with its IPO, it's easy to adjust the top and the bottom of the axis depending on the move that you're seeing. But things like the market itself, like the indexes or names like MVDA, where they've had a long history of trading to where they've kind of identified the high and low end ranges of exhaustion, it's not as likely, right? Or it's not as common, I should say, of being able to adjust the axis. So when it does, you one, know it's off of a really strong move, in this case to the upside, but two, it means you need to take pause about where the new top is going to be. So you can see that we have continued to adjust this axis higher in green bars, and turn the price has kept going. And so now what happens is that this really can continue to the upside. That's the caution here. So I know somebody was asking about exhaustion on NVDA, and certainly, right, from a daily perspective, it seemed like it pulled back a little. From a weekly perspective, of course, we're at the top. But the issue here is once you start to adjust the axis higher, it can go as long as it wants. The clue that you're reaching the new top of access, right? The new high point of, in this case, bullish exhaustion, is when you get a few red bars in a row. That is what you want to look for. And as of this week, we're still a strong green bar. And so with this being the case, with the Bollinger Bands flaring open, right, with the trend turning bullish here, great follow through on the bullish divergent bar last week. So anyone who took that, well done. Excellent follow through higher. But outside of all of that, it can really keep going. So if you're in something bullish, and especially if you have multiple contracts, certainly don't hesitate to take the profits, but this might be the place where you leave a runner on, right? And you have a trailing stop with it to continue higher, because it really can continue to go, especially with getting that green bar today on the daily chart. If we get a second green bar tomorrow, that's a clue that this might be going into its second run to the upside, in this overall big move, that it's going to keep trying for higher highs. Now, eventually, what happens with the exhaustion and what happens with the run is you'll notice that off of every consolidation into support on the daily, or off of every little pullback before the next bounce, each run starts to become a little less and less in point value. Meaning, and then I'll wait for the daily chart to pop up here. But basically, it means, like, let's say the first really strong run to the upside was 50 points and then it pauses, right? Well, then the next run might be 30 points until it pauses. And then the next run might be 15 points, right? Each following run to the upside on the overall bullish trend becomes a little less and less. And so that's what you want to look out for, because the smaller those ranges start to get, that's your second clue that you might be finally reaching exhaustion levels. But right now, if we get another green bar tomorrow, if the market does stay boistered up from the Fed news, and it keeps doing its bullish run, this still has a good possibility to keep going to the upside. It's not really the best place for me to jump into an entry. Maybe back here, whenever it was off of the 10-period simple as support, might have been a bit better of a spot. It would have been hard with 400. Certainly, if you took the bullish divergent bar entry off the weekly chart, that was a great entry to play for the follow through higher in the continuation. But yeah, it's one of those cases where it could really keep going. Arguably, let's take a look at the monthly. Let me close NDX, see if that helps the speed of my charts a little. There we go. So the monthly chart, right? If we keep going to that larger time frame to try and get a better idea of exhaustion, the monthly chart still has room till the top of the axis, which is maybe not what people want to hear if they're looking for a pullback entry. But I will also say you did have a true low. It wasn't actually at the bottom. Usually I get the true lows closer to the bottom of the move. This one printed a little early. But as you can see, whenever this true low prints, especially on the longer time frames, it's usually a good spot to buy in shares. The last true low, when it printed back in 2019, we were at a price at around like 42, and then it went up to 350, right? This true low here, when it printed, it was at around 170, 200, right? Kind of between 200 and 150 range. And now, we're at 422. But there's still probably a couple more months in this to where if it really wants to keep stair stepping to the upside, from the monthly point of view, there's still room until we reach the top of the axis. So would I love to see a pause, right? Give me a little bit of a breather so I can jump in at a good technical support. I'd love that personally, but it may not happen. So if you're in something and you have the ability to leave a runner on, this is a really great place, an example of a symbol to leave a runner on, right? And like I said, maybe trail the stop or something with it. But if you're looking at a new entry, you might just want to scan for something else. Or if you're really feeling a case of FOMO here, right, which leads into the dark side of trading, so keep that in mind. But if you're really feeling that case of FOMO, then what I would say to do is please consider just doing a small portion of what your normal risk tolerance size is. So let's say per trade that I put out there, I risk usually around $500. Well, in this case, I might only risk like 100, maybe 200, right? Keep it on the smaller end of my risk tolerance. That way, if I do finally get that consolidation or pullback I'm looking for, I can build into the normal risk tolerance of $500. If it keeps going, great. Then I have a little bit of capital in play to where, I keep with the bullish run too. But let's say I jump in and I jump in at exhaustion levels, back, it can't hold support and it keeps breaking down. Then, right, you'll be much happier managing only $100 to $200 of risk than basically jumping in at the high and managing your full 500 of risk tolerance. So keep that in mind. For myself, I'm, you know, The weekly bar was probably the entry I should have looked at if I wanted to play NBDA, but that's what I see there, guys. ORCL's up next, so let me pull that one up. And yeah, 007, absolutely. Let me add those to the list. We should be able to get to them to SMH and KWEB. And ALBA, absolutely. We can take a look at Boeing. And then Tesla, yeah. Yeah, I see Boeing you guys want to talk about, certainly. And I'll add Tesla to that list. Of course, AM, not a problem. So ORCL, this one had earnings. The other day we talked about this. I know I think it was over in the small account mentorship, took one of the earning trade ideas I had on this and took the quick win. Seems like the right idea, right? Because we immediately bounced back up today. The bullish trend signal from back here prior to earnings has remained valid. It hasn't canceled out yet. Momentum is also on the daily chart starting to adjust the axis higher. So just the same stuff that we talked about with MBDA applies with ORCL from a daily perspective. This is really continuing to the upside. So until you get a few red bars in a row, it can keep going. We are attempting a bullish divergent bar. I will also point out yesterday, even though this pulled back quite strongly, we made a third deviation Bollinger Band snap, which is, for those of you who don't know, the third deviation Bollinger Band on my charts is this outside blue line. So when you exceed the third deviation Bollinger Band, even if it pulls back like this, there's a good probability that one, the next few trading days will stay within this bar, the one that exceeded it, it will stay within that bar's current range. Or two, there's also a possibility that it keeps going higher. And I know that sounds weird because a move outside the third deviation is usually a big move. So you're like, most people who like to play the ATR and, look for those reversals and stuff, they're like, this is, a third ATR move. It means it has to pull back. Be very cautious thinking like that when it breaks the third deviation Bollinger Band, because when it breaks that third deviation Bollinger Band, there's a good probability that it can actually keep going, especially if there's room on momentum, which in this case, technically we're at the top of the axis, but we've been adjusting it higher. So in that sense, there can still be room on momentum to the upside. Another thing to point out with the bullish divergent bar, if it does print into the close, could give us a possibility of a higher high. Be mindful though, back-to-back divergent bars like we see here can sometimes be a sign of overall consolidation. I will say though, if this does continue a bit higher into the close and we close right around where we opened yesterday's bar, it's almost becoming what I know Neil calls an equal opposite bar. I've called them mirror bars in the past. But basically, if you were to stick a mirror in between these two bars, they're a reflection of each other, right? And so sometimes when you get bars that look like that, where it's almost like a literal reflection, where we open here, drop down, close. We basically open the next day where we closed, have a similar bar viewpoint with the lows, and then we bounce up and we close basically at where we opened the prior day, and it looks like a mirror reversal image. That's usually a sign where the trend is changing. And in this case, with how this mirror bar works, it means that it would keep going to the upside. So that would have me a little cautious. I don't know if I'd really want to put on a trade here. Similar situation if I felt the need to put on a trade here because I feel like I missed out or something, I would still only do a smaller portion of my normal capital risk. And I would want to confirm that this bar prints as a bullish divergent bar into the close. I wouldn't want this to all of a sudden pull back, because keep in mind, if Fed news disappoints, that could be a catalyst for things to finally get a little bit of a breather and a pause to pull back down. But from a daily chart, that can keep going. Let's see if there's weekly exhaustion coming up or if we're getting to those levels. Looks like SPX is finally getting a little bit of a pullback here during our session. A little bit stronger. That's what I wanted to see. So it might give us an entry to play back up if support holds. Oh, so the weekly chart, man, this is like an MBDA all over again. So weekly chart, we've technically with this current bar have started to adjust the axis higher. So similar situation. This can really keep going if it wants to until you get a couple of red bars in a row. This week is also made a third deviation Bollinger Band snap from a weekly perspective. So same thing applies. That means for the next few weeks, there's a good probability we'll either stay within this range or we could actually continue to the upside. So I would kind of want to see where this closes for the week. Personally, if I were to take a trade off of this, let me pull up the option chain. No, it's not that bad actually. So I wouldn't mind almost a trade like this. Give myself a couple of weeks, help protect some against theta decay. Play the bullish divergent bar, play the third deviation Bollinger Band snaps, still stay well within or below my risk tolerance, right? But look at something like the 125 strike. We're not too far away from 125. The high yesterday was 123.99, right? So just a dollar shy basically of that level. Which means if we do get the follow through with higher highs and this keeps pressing, it wouldn't be out of the question for this to either get at or potentially in the money. Currently, right, if we were to get a move to at the money by tomorrow, our cost basis is 166. A move to at the money is currently around 278 to 328. That's over $1 of profit. So that certainly doesn't seem like a bad risk versus reward. Of course, if it keeps going, especially if you did multiple contracts here, because that's within your risk tolerance, then you could end up leaving a runner on to really take to the upside. But like I said, it's not the cleanest place to jump into something because of there not being any you're not at a technical support level like the 10 or the 30 to jump in at, but the adjustment of the access to the upside, right, means momentum can keep going. The third deviation Bollinger Band snap gives that possibility on both time frames for it to keep going. And then the bullish divergent bar, if that closes today, gives that probability of a higher high within the next few bars. So all of that could lead to a good possibility of this going to the upside. If this is a little outside your risk tolerance, if you're like, man, Allison, I kind of like the trade idea, but this is at the top of my risk tolerance because I trade a smaller account, I totally get it. You could still look to play it and maybe lean towards a spread, right? A 3-point spread here is $1.14, $1.86 profit potential, still not a bad risk versus reward. And all you're looking really for is a move up to 125 or higher, which, like I said, based off yesterday's high, certainly wouldn't be out of the question for it to happen. So after ORCL was Path. Let me pull that one up. And also for my folks over on YouTube or Twitch, if you guys have any symbols you want me to pop up here, please let me know. I'm happy to look at them for you guys. Or if you have any questions in general around trading, happy to answer them. So on Path, this one is at the top of the axis. It's actually doing what it normally does, right? The last few symbols have kind of been a little bit more outside the norm of what you typically see. But here we are at the top of the axis, just like we've seen before. We hit exhaustion, momentum starting to pull back. That allowed the price to pull back down and is currently in consolidation. So the good news for bulls is it's not completely giving up everything. The trend is attempting to turn bullish, but Bollinger Bands are flattening out some. Momentum still has a lot of room to pull back if it wants a full reset to the zero line. So I like that it's holding the prior price resistance. 18 used to be price resistance. It's trying to hang in there and keep it as support. So that might be, not a bad spot for an entry, but strategy wise, based off the daily chart, I'd probably lean more towards a put credit spread or a put unbalanced butterfly, something that can benefit both from chop and just work off the theta decay off the premium, or can benefit from a bullish move to the upside. And the weekly chart, once again, this is why I like looking at multiple time frames here. The weekly chart, the struggle it's having right now is breaking the ATR trailing stop, which is technically at 18.25. So right by that $18 price level. So that's the issue it's having. It attempted to break it last week, but into the close of the bar, it pulled back and continued to hold that as resistance. and now we're trying again. You do have Bollinger Bands attempting to open up some. You have bullish signals on our lower indicator. So all of that does look good for it attempting to break here. But when I'm at a level like this, I either one, need to get a pullback into support so that way there's room to play up into 18, or I want confirmation that it is actually attempting to break the ATR trailing stop. And then I might be a little late to the game, but at least I have that confirmation and then can continue to play it higher. But buying in right at a price resistance, right at a technical resistance like this, I just can't do. It's one of the rules that I have from my trading plan over the years. It's one of those situations where I've caught myself doing that a few too many times, and it's never usually worked out in my favor. So I either want confirmation it's starting to break this level, and then I wouldn't mind jumping in, maybe trying to play the weekly squeeze higher, or I want to pull back again because this has been a pretty choppy range, right? So if you could get a pullback down into either the moving averages or into price support here around, I don't know, 13, 1250, and that holds, then by all means play for the bounce back to the upside at that point. But a little tough here. SMH, let's pull up that one. I think we'll be able to get through all the symbols today. So SMH, I know for those of you who have caught Mary Ellen here at Simpler Talk, I know she was mentioning a while ago that there was moves going into the semiconductor area. So if you caught that whenever she was talking about that, you might have been able to play this nice run up. If you did, well done. But we are similar situation. We were at the top of the axis. We pulled back a little bit during the consolidation here. Then we canceled out. We started to get a green bar. So this is basically what MVDA could do, where it pulls back a little bit and then it goes back towards the top of the axis. And when it starts to go back to the top of the axis, it gives you another short run to the upside in this overall bullish trend. So that's kind of what we're getting right now in SMH. We are getting closer to that top of axis though. The back here, right, the bullish divergent bar off support, for example, would have been a great spot to jump in long. Not my place to really do it when it's back away from support, right? It's not the cleanest entry. I feel like I was chasing it. Don't like chasing things if I can help it. We'll take a quick look at the weekly chart. But certainly still overall bullish. So the weekly chart is basically at or very close to the top of the axis. Might have another week. Similar situation. Great job if you took the bullish divergent bar entry last week. Excellent follow through for a higher high. So well done. Everything about this is still bullish. The squeeze firing. It would only printed a couple, 2 weeks, but it is starting to fire. So that could give it some extra strength, maybe help it adjust the axis higher. But if you're in this and you're debating about taking profits, I think there's no issue, at least taking some of your profits off the table, leaving a runner on, because it's basically getting to exhaustion levels on both the daily and the weekly time frame. So unless you can really confirm like MBDA, it's starting to adjust that axis higher, you want to be cautious of things still potentially starting to stall here or maybe getting a little bit of a pullback. Overall, I mean, it's still very much bullish outside of that. But it's certainly not the place for me to jump into a new trade. And if I'm in something, I'm probably looking to start taking some profits if I haven't already, especially if you wanted to protect capital before the Fed news. I never think that's a bad idea to do so. KWEB, let's pull that one up. And then Earl, if we get a chance, I'll pull up COP. I might not get to it today, but I will certainly try. So on KWEB here, in this case, we still actually have room on momentum. We have the bullish signal here, but on this run up, we've been trending below the 100 period simple and we're just getting up to test it. So I know I talked about this quite a bit last year because it was a really clean setup last year to take because of the bearish market environment that we are in. But you always want to be a little cautious when something has been trending below the 100 in a bearish trend like this, and then it gets a bounce up to retest the 100. Sometimes it's a trap for bulls, right? Bulls think that this is going to break and continue higher, but then it ends up stalling or it barely breaks, pulls back, retests the 100, and if on that retest it can't break again, that's usually the clean place to then go ahead and short, or at the very least look at call credit spreads and stuff. So currently we're on that possibility of trying to break higher, which if it can and it really continues to stair step up, then we might be finally breaking out of the bearish trend. Otherwise, though, be very cautious about the possibility that it starts to stall here and either goes into a wedge pattern between the 100 and 10 period simple, or if it really, starts to stall in reverse, that it could give us another rollover and actually an opportunity to jump in the put side. Let's make sure we're not running into anything on the weekly chart, though, like weekly support or something. And on the weekly chart, also a bearish trend. We've been in for, I don't know, the last like 2 years almost, year and a half. Started to get that consolidation. Momentum's very flat along the zero line, so that's a sign of consolidation. We do have a pullback signal here. Tempting to go into a low compression squeeze this week. The Bollinger Bands are certainly getting narrow. So the tighter the Bollinger Bands get when they form like a lobster claw, there's a better probability that one, a squeeze is forming, which we can see that it's starting to. And two, when it finally breaks, the Bollinger Bands will start to flare open and usually get a good trend move following it. But it has room up into its 100 period simple. So if we can break the daily 100, then this would be my next target to the upside. But the daily 100 probably isn't that far away from the 30 period simple in the weekly chart. So I'd be a little hesitant about this personally. I don't see any trade idea that I'd really say this looks like a solid one to jump into. But it would definitely be one on my watch list. And what I'd be watching for on the daily chart is, does it hold the 100? And if it does it drop back down into the 10 and hold that as support? And if it does do that, then you're likely in a wedge pattern to where short term you can scalp from one range into the next, take the profits. If you're really aggressive, then you short here, play back down into the 10 and wait for that energy to build up as they get narrow. And then once it breaks either above the 100 or below the 10, you might have a better idea of the trend move that will follow through. That's definitely starting to kind of get inside that wedge pattern. And Lisa, absolutely, I'll add it to the list. Don't know if I'll get to it today, but I'll certainly try to. And yeah, 007, of course. May the trade be with you on this Fed day. So Boeing was kind of hugging the 100, finally starting to break to the upside some. There is still room on momentum. The squeeze has started to fire, but usually once it starts to fire, you can give it, I think the rule of thumb is about 8 to 10 bars for the follow through of that strength of whatever move, in this case to the upside, to keep going. So we're on our like third bar of it firing. So there still might be some more strength to the upside. You can see here right around probably 17 to 220 has been a price resistance level. So we're attempting to break above it. If we can maintain on the top side of things, meaning ideally we hold at or above the 220 range, then it shows that that price resistance is attempting to hold as price support now. That's a good sign for the bulls. If we do continue to consolidate and hit the 10 period simple and that holds support, that will likely be a re-entry to play for a bounce and continuation higher. And like I said, because there's still room on momentum, that could certainly keep going. Bollinger Bands are opening up. The 30s getting ready to cross above the 100. Once that happens, that will be a bullish trend once again. Make sure we're not running into weekly resistance. Thanks, 007. I will be, for those of you who followed along with me quite a bit last year, whenever those end of day pin trades were really working out nicely because of the volatility and the trend moves that we had into the close of the market. Fed days, even this year, have been really good end of day pins. So I will be keeping an eye out for that. So might try and open that in the challenge account if it makes sense. I will certainly let y'all know. Otherwise, for those of you in the small account mentorship, we're definitely going to be looking to see if that's a viable setup for today. Boeing on the weekly chart. So you can see here on the weekly, you can really tell, right, where that price resistance is at 220. It's just been a flat line. We've consolidated. We are holding our moving averages as support. We made a bullish divergent bar last week that technically has followed through with its higher high. What I do like is the momentum, right? So momentum was basically at the top of the axis. It reset, and now we're getting a green bar at the 0 line without crossing below it. That, if it continues with a green bar the next week or two, is usually a bullish trend signal for a move back up. We are starting to print a bullish trend signal on the compound breakout tool, right? Last time we got that here, it was more of a reversal signal, but you can see how we went all the way up into resistance. We broke resistance, so it started to turn into a more bullish trend signal. And then once we kept stalling at 220, that ended up starting to cancel out right here. So that was your clue on this bar to protect any remaining profits to the upside if you took the signal back here when you got the valid bullish signal. So if this prints into the end of the week, keep in mind, once again, Fed could change the narrative, but if this prints into the end of the week with the squeeze, with the momentum, might be a solid setup to try and play higher. Once again, I would like confirmation, given where we're trading at now. I would want to see this close above 220 for the week. If we can close above 220 and all of this remains valid, then we might be starting to go into that trend move higher. But if we close below 220, I would still be very cautious of this acting as price resistance. Sometimes we've seen this setup before where Bollinger Bands are flaring open. We have the bullish signals down here. We have a squeeze. All of it looks solid, but you're right at price resistance. And unfortunately, price resistance can beat everything. Same thing with price support. So I would really, I'm going to actually put this on my short list. Let me write that down before I forget. But Boeing, I actually like if it can close above 220. That, or if it does end up pulling back, give me enough of a pullback to where then I have room to play into 220 for the next attempt higher, right? But I don't think that looks like a bad setup necessarily, especially that weekly chart. Pull up Tesla now. I think we'll be able to get through the rest if the chart wants to load faster. There we go. So here's a great example of a symbol on Tesla. Finally broke to the upside, right? So for a good chunk of this year, the issue with I at least had with Tesla was it broke the 200 price level. 200 was a pretty big level. If we were to go back on a weekly chart, you would see that for a few I think like a year and a half at least, but for a while it definitely acted as price support. You can see how it tested that level here more recently, held it, bounced. But then going into the end of last year, we actually broke 200. And when we broke 200, it turned into price resistance. And you can see it attempted to go back up and test it here, failed, had a second test here, that failed. We started to play it short, and the profit recycling mastery at the time to the downside. That was a lot of fun. I think we even did a challenge trade, one of those entries to play to the downside. And that, like I said, it was a lot of fun to play for that move lower. We hit bearish exhaustion, then we bounced up. We attempted to break 200, but we couldn't quite get going, right? It kept basically stalling in that range, and then it would pull back towards the 100 period simple, but then it wouldn't really break below the 100, at least not in a strong and meaningful way. And so what we ended up seeing was all of this kind of chop in this range. We couldn't really get going back into a bearish move to play a rollover, and we couldn't really get going past 200 to play for a strong bullish move. And then we finally did, right? We finally broke above 200. We actually made a nice bullish divergent bar off that level. So, if you're seeing that and wanting to take it, that was a good entry. Here was a great re-entry off that bullish divergent bar. But then what happened? Well, we kept stair stepping up, and arguably after really this one, maybe you would count this here, we never really got a strong pullback into support again, right? It kept going. It just traded along the upper Bollinger Band to the upside. And why was that a possibility that could happen? Because there was still a lot of room on momentum until it hit the top of the axis. So this is what I was pointing out at the very start of the session when we were talking about SPX, where, man, it's just, trading along the upper Bollinger Band. I'd love to see a pullback for an entry because that's more my style of jumping in at support to play for bounces higher. But it may not get that if there's a lot of strength higher, because just like there was on Tesla where there's a lot of room on momentum to continue higher, on the S&P on the daily chart, it's in a similar situation, right? It's about only halfway, a little over halfway to the top of the axis. So if SPX really wants to continue with this run, we may not get the pullback that a lot of traders would like to see for that re-entry, because there's still room on momentum if this strength wants to continue past the Fed news today. If the Fed says something that the market really wants to hear, then you have to be open to that being a possibility, which means, right, if I were to look at a trade entry on SPX, I would want ideally something like the bullish divergent bars to help out with that higher probability of a higher high. And even then, I would still be keeping my capital risk on the smaller side, because once again, it's not the cleanest entry. Doesn't mean it can't work out, but it's not the cleanest to see. Now, for Tesla at this point, we're at the top of the axis, right? The last time we were here earlier this year, back in February, that was exhaustion. You can see we consolidated and then pulled back. Back here, when we had exhaustion in August, you can see that we started to consolidate, definitely got to pull back here, but start to pull back a little bit, and that allowed momentum to reset. So not sure how much higher this move is going to go. It's had a great run. Let's check out the weekly chart really quickly. If it starts to adjust the axis higher, like NVDA did, then it can keep going to the upside. But buying in at where prior exhaustion held, and we're right at that level, that would make it a little iffy for me. Weekly chart still has plenty of room for momentum. Bullish signal here. You have the squeeze. You're just now, though, attempting to break the 100-period simple on the weekly. So similar situation to what we talked about a little bit earlier in the session. I can't remember what symbol it was off of, but we were trending below the 100, and now is our first attempt to break back above it to go into a bullish trend. So if we can't get a strong break higher to keep going, right, if this really can't keep stair stepping up, be very mindful of it. One, potentially stalling here. Two, it could pull back down into its 10, right? If the 10 holds, then great re-entry to play back for a bounce, especially because that's right at the 200 level, certainly. Don't know if we'd get that much of a pullback. But I'm always just a little cautious in this range. So given that we're at daily exhaustion and we're hanging out right by the 100-period simple on the weekly chart, I'd either want a little bit more confirmation that daily exhaustion might be starting to adjust the axis higher and we keep going, and in turn the weekly chart keeps stair stepping up above the 100, or we get a pause here, hold the 100, get that pullback in daily momentum, and then if the daily chart starts to build up again while we're still continuing to hold 100 as support, maybe that could give us a re-entry. But this is a little bit of a tough spot for me to look at a new trade idea from, just because I've seen how these 100-period simples can kind of change the narrative once we get into that range. If it doesn't have a lot of strength to really keep going and pressing higher, then you need to be mindful it could start to stall, or we could start to see that pullback. COP is up next. I'm technically right at the end of my session. Lorna, if you're in here, or maybe Mirza is, remind me. I don't think anyone's directly after me, so I should have a few minutes that I can go past my session time to finish up the analysis. Of course, AJ, not a problem. COP, so here's a good example of, we got towards the 100, it failed, got towards the 100 again. It failed, and now we're in the 100, and we're basically in a slight wedge pattern between the 100 holding as resistance and the 10 and 30 holding as support levels. Notice the Bollinger Bands are kind of starting to make that lobster claw where they come in together. You're seeing the squeeze build up in strength. Momentum's technically above the 0 line, so that adds a little bit of bullish strength to the idea that we could try and break higher. But on the compound breakout tool, we have a pullback signal. Yesterday, we made a bearish divergent bar that followed through with the lower low. So it's in a very tight range. So this is another situation where I don't know if it makes sense on COP to do this, but you could either try and scalp, right? If it looks like support's holding, then play it back into the 100 for a quick scalp. Take the win if the 100 period simple moving average holds, then an aggressive move would be to short from there again, play back down into this range. The more conservative way to go about this is probably just wait for a break one direction or another, right? If we start to break above the 100, above the ATR trailing stop, then there's a good chance that this squeeze is trying to fire to the upside and we're finally attempting to go back into a bullish trend. If we start to break our moving averages, the Bollinger Bands start to flare open to the downside, then that's a better spot to think, okay, we are just going up into resistance and this is our reversal back down once again. So definitely in a wedge pattern. Arguably, you could look at like a consolidating trade here, but given how narrow the Bollinger Bands are starting to become and the squeeze setting up, I would probably just sit on my hands and wait for it to break one way or the other. And then last but not least, ARKK, ARK. See what Kathy Wood's doing. So on ARK, we're breaking the 100, right? So not really in a bearish trend. Here was a bearish trend. So here's a good example of we were in a bearish trend. We attempted to break the 100, failed, went into the wedge pattern. The wedge broke to the upside. And so you play for the trend higher, right? Here, started to break a little bit below the 100. It wasn't actually in a bearish trend though. Bounced up, held the 100 as support, and then we're trending to the upside. There is still room on momentum, not a clean signal in the compound breakout tool, unfortunately. And a part of that, because this is technically more consolidating signal, a part of the reason this could be a consolidating signal is because we're right back at price resistance. So if we were to go to like a weekly chart, you'll see the bigger picture point of view is that this has just been in a wide range of chop and we're still kind of stuck in that wide range. So here's the weekly chart. You can see wider range of consolidation. That's basically what the weekly chart's been doing since the end of last year into this year. This week, we're attempting to break the ATR trailing stop as support. So if we can break that and we can break this price resistance here around 45, might actually get going to the upside, right? There's room on daily momentum to continue higher. There's room on weekly momentum. You have the bullish signal on the compound breakout tool. You have the squeeze. So we might actually get this to fire to the upside. My next target, if that happens, would be 50 as a psychological level, followed by the 100 period simple, which is currently right around 62. But I would probably wait until the end of this week to confirm that's happening. What I wouldn't want to see is I jump in today, the Fed drops the market, in turn, ARK follows along and drops with it, and then the ATR trailing stop still holds as resistance, and we basically still hold price resistance at this level too. Because if that happens, then there's a better probability we'll go back down test support, and that, of course, would be a much cleaner entry to try and buy in on to play to the upside. So this is another one where if you're really wanting to play it, maybe wait at the very least until after the Fed news today to get a better idea of direction, or wait until to the end of the week to confirm we're breaking the ATR trailing stop, and then maybe try and play that a bit more directionally to the upside. But that is my time today, guys. So thank you so much for joining me. As always, may the trade be with you. If I do find an end of day pin trade that I like, that looks solid, and then I have time to jump in for the challenge account, I will likely look to do that. Otherwise, I might just keep it to the small account mentorship account. Certainly looking for new trade ideas, but I'm kind of sitting on my hands until after the Fed news happens. And then once that does occur, right, ideally those premiums drop down, gives us a little bit of better identification of which way the trend is trying to go with the market, and then we can look to take some entries for swing trades from there. So as always, have a wonderful rest of your day, guys, and I look forward to talking to y'all next time.